Elon Musk certainly making August interesting. There was a take-private proposal and a price, but was it all just hypothetical? That's the key question for investors as they digest yesterday's tweet and subsequent memo from Elon Musk. The Tesla CEO tweeted that he was considering taking Tesla private at $420, funding secured. That came after a report that Saudi Arabia's sovereign wealth fund took a stake. As the stock surged, the question swirled. A traditional leveraged buyout would be very difficult for Tesla because the company has negative free cash flow. A full equity backstop, another option whereby the buyers acquire Tesla without debt, is another possibility, but these are typically limited to smaller deals, not a $70 billion deal like Tesla would be at $420. Musk described a take private that would be very unconventional and complicated. It would require Tesla's thousands of individual shareholders to roll into the private company, giving away their liquidity rights. Musk eventually said in a memo to employees that no final decision had been made, but he believes that Tesla would operate better as a private company because it wouldn't be subjected to price swings in the quarterly earnings cycle, nor would it face the criticism from short sellers. Guys.
Can I just explain something for the really novice viewer?
Yes, please.
Leverage buyout. The company wants to go buy another company, like private equity firm wants to buy a company. They borrow a lot of money to do it.
Yep. Right.
And then they buy this company, and the cash flow is what pays back all the debt that the private equity firm borrowed in the first place.
It helps.
Right.
Yes.
That's why you can't do this with Tesla.
Exactly.
Because you would borrow a lot of money to buy Tesla, and yet there's no cash flow to pay back all that debt.
It makes the financing a lot more difficult because the banks that are providing that to the private equity firms in order to acquire a company in a leveraged buyout, they want to see the predictability of the cash flow. They also like to see companies that have a low PE ratio, price to earnings ratio, and Tesla doesn't have the E part of that equation either.
Okay, couple things. Joseph, you asked.
Yes.
I spent literally the last however many hours trying to make sense of this on the telephone.
How come you're talking to Joseph and just Joseph?
I'm talking to
because I asked him. I knew he
I usually
I don't, because before
like to think that I'm able to find people
sensitivity training, that's all.
In the upper echelons of both these companies and banks and other places, sources who would know about this, who may be able to provide some information.
And what'd you get? You sick?
I got very, very, very little, but I would tell you why I got very little. I got very little because there is no contact. So here's the part that makes no sense about this. The idea when he says funding secured, unless we're all calling the wrong people, the traditional places you would go for funding, the big banks in America, SoftBank, by the way, which has nothing to do with this. The sort of natural places where there's lots of money, Warren Buffett even. My understanding is he's not had those conversations. So the question is where the funding comes from. There's a couple of other things just to think about. One is we talk about it as a $70 billion takeover.
There's also debt.
It's really closer to 50 because he owns 20% of the company already. He talks about shareholder support, that he has shareholder support for this. So you call some of the biggest shareholders. They have not been brought over what's called the so-called wall. How would he know that there's shareholder support if there really was shareholder support? Because he would have had to broach this with them, in which case they would have all of a sudden become insiders. There's a cynical take on all of this.
That's my immediate thing. We've got this guy. I mean, the last tweet, like, it was talking about like some pedophile or something. Remember the last one? And then you got a flamethrower that he introduces, and then you see how pissy he gets about any criticism on those conference calls. Remember the conference call where he just said, "I'm not taking."
Oh, yeah.
So there's been this erratic behavior. So to me, it didn't look like anything other than just like throwing it out there to squeeze.
I literally thought that when the tweet first came out, I thought that his account was hacked.
Yeah, so do we.
I thought I was waiting when the market was halted. I was waiting for a note from the company to say the account was hacked.
I was very I thought it was almost a joke.
I just want to suggest there is a cynical issue here, which is that there's 900. Well, that too, but there's $920 million of debt that's convertible. Comes up on February, I believe February 27th, 2019, at $360. It's like $359 and something cents. Yeah. The question is, if you can keep the stock at that price.
That's not cynical. That's a brilliant move. Yeah.
If you can keep that over that price, we're now over that price, but you'd have to stay there for a while. And by the way, I don't know if you'd actually want, I mean, there's a very interesting question about how a debt holder would even deal with this, because I don't even know if they would anyway. So that's another piece of it. There's about 100 pieces to how this could or could not work. By the way, his intent of taking it private, I actually think, oddly enough, does make sense. So, by the way, the short sellers who believe this whole thing is a fraud will tell you this is what you do when you're really in trouble. So there's so many questions and basically no answers.
And there's